And welcome, it's Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And another very active week. We will get into all of that. But let's begin by taking a quick look at some of the data that was released that moved the markets and what to be on the lookout for next week. First up, we did get two key pieces of inflation. Both CPI and PPI data came in above estimates. We also got retail sales data that showed the economy is still strong. This puts the interest rate cut plan, makes it a bit murkier, and there are investors now that are not looking for a December rate cut because of these numbers. Now, we'll take a look at those interest rates as well, because last week inflation fears did arise because of his election, and some of his policies are expected to possibly increase inflation. So we do have those crosswinds out there. Also, we did see retail sales coming in strong, and that is also showing an economy that is staying strong. And last up, as it relates to next week, not a whole lot of economic data, but NVIDIA will be reporting their earnings on Wednesday. So we're anticipating a lot of uncertainty going into those numbers, and then certainly possible or clearly expecting some movement in at least NVIDIA beyond their report. So let's go ahead and get started. Take a look at these broader markets and see where did we close for the week. And here we are, daily price chart of the S&P 500. You can see that we did pull back this week, down a little bit over 2%. RSI trending lower. It is still up here in positive territory, however, and we can see this MACD still up here in positive territory, poised for a potential turn as far as that black line down through the red. So I certainly will be keeping an eye out on that as my subscribers to my MEM Edge report. We want to stay on top of broader market sentiment. For now, the uptrend is still in place. Now, we can move beyond the S&P 500 and take a quick look at the Nasdaq, because we also saw the Nasdaq pulling back this week, down 3%. It did close just below this key 21-day simple moving average. RSI on the cusp of turning negative, and then likewise with that MACD, both in positive territory at this point, but really indicative of what we saw in the markets, with a lot of that price action on the negative side taking place today. So let's go ahead and move through beyond these broader market sectors and take a look at the 11 sectors of the S&P 500, and we are looking at a performance view on the week. From here, I'm going to choose a candle glance view. This is what I do each week. We are looking now at a 2-month daily price chart view. I'm going to add a relative strength indicator, sort it in descending order, and we will get a very good feel for where that relative outperformance is taking shape. It's going to be the groups up here in this upper left quartile, weaker areas down in the lower right, and then here is the S&P 500 so that you can follow those areas that are a bit stronger. And again, this is a movement that is not going to be based entirely on what took place last week. It is a slower progression or regression throughout the weeks going forward and back as well. So let's go ahead and take a look here at the forefront. XLF up here, top performer, up 1.5%. Here's that election-related gap up, and we are holding in here quite nicely, and a lot of this having to do with bank stocks. We'll take a quick look at that bank group. Also today, I will be sharing with you how you can use periods such as this week to really refine your watch list and have stocks on the lookout for this pullback as an opportunity to enter. So also up here, we did see energy. Again, they were top performing last week, gap up on the election news, and then a nice relative rally here, up 1% for the week. And this is despite the fact that oil prices dropped last week, but the XLE sector still in a very nice uptrend. So moving through, let's take a look at some of these areas that got hit a little bit harder. This is XLI, and it fell in line with the S&P 500, down 2.1%. But this is one of those groups where an ideal area that you can have a good feel for stocks that are top in this group and that have pulled back, because it is a cyclical area. It is expected to continue to fare well. And from here, let's go ahead and take a look at some of these weaker areas. XLK down quite a bit. We will get into what is negatively impacting the technology sector, and it was down 3.6% this week, and you can see 2.5% of that was today, with a close below this 21-day simple moving average RSI trending into negative territory, where you can see overall throughout this year that tech has been fairly volatile. You can only imagine that a lot of this is going to be Nvidia, Apple, Microsoft, the heavier weighted names in this area, but there is one group that is really coming under selling pressure. And then one area that I would tell you to look at for pullback opportunities. We'll get into that with our next segment. Let's go ahead and take a look at some of these other sectors that are down and out. Healthcare got walloped this week, down 5.6%. I will share with you the one area that really pulled this group down, and it really is industry group wide within this healthcare sector. This is something I've been talking about certainly in my MEM Edge report since we entered into this downtrend back at the beginning of October, and you can see that we are still trending downward, a bit oversold after this week's negative 5.5% decline, but take a look at this volume. So we are seeing pretty hefty selling in that group. Again, I will go ahead and share with you where that pressure is emanating from. Also on this negative side, we can see basic materials. Not sure how many of you follow gold stocks and some of these other materials names, but they are declining, all about that inflation fear and that rise in interest rates. So let's go ahead and take a look at some of these sub-industry groupings that are beneath the sector area. We are going to drill down further. So really quite helpful with drilling down and having a great feel for where that relative strength and weakness is shaping up. Again, 2-month daily price chart view. I talked about technology. Let's take a look at that one group that really got hit yet again last week. This is my chart from last week, but we do still have very similar characteristics with a close below this 200-day simple moving average. Take a look at this volume, and now we have this MACD back in negative territory. Semiconductor stocks were down 8.7% last week, and of course that is going to negatively impact technology group. But on the other side, we do have software stocks, which marched to another new high Wednesday before pulling back later in the week. And this is one area I would highly suggest putting together a watch list of leadership names in the software group that have pulled back with the group, so that when strength is renewed, when the broader markets do get back into a more confirmed uptrend, you will be able to take advantage of this week's pullback. Also up here at the forefront, I talked about interest rates climbing higher. You can see here we got up to 4.5, closed at about 4.4, but net we are trending higher. And again, this is all about inflation fears and the fact that the Fed's interest rate deceleration may be put on pause because of some of the data that we've been seeing. So you will want to keep an eye on this interest rate yield. This is the 10-year, and it is going to impact select areas of the broader markets. Here we are with XLF was the top performer. Let's take a look at KRE. This is the regional banking ETF. This is another area that is prime and ripe for looking for pullbacks. In this case, KRE back to this 10-day simple moving average and bullish RSI and MACD. Moving through, Russell 2000 was hit pretty hard. It was down 4% this week. Now, of course, this was after last week's outsized returns, but this is an area that is going to be very quickly impacted by a rise in interest rates. A lot of these smaller companies are very heavily capitalized with debt, that a higher interest rate environment is not going to be beneficial. But really, we have to also note that it was in an overbought position going into this week. But small caps would be another area to, again, cull together a watch list so that when the pressures eliminate, you can then take advantage of that pullback that took place. Moving through, let's go ahead and take a look at volatility because it did jump a bit today. We closed, this is VIX, the volatility index, we closed at 16. So if we were to get to that 18 level, it would be a bit more concerning, but it is of note that we are seeing uncertainty enter back into the market. Certainly one of the reasons is it is beginning to be revealed as far as major cabinet placements by the new administration for next year. And that is causing a lot by way of cross currents for the markets. And let's take a look at some of these other areas moving through. I talked about healthcare down 5.7%. And here we are. This is the biotech industry group, IBB. Just a huge sell-off today alone, down 4.8%, huge volume on this selling. Now, this is another area that is going to be negatively impacted by a rise in rates because of the funding needs for these non-earning companies, certainly a large portion of them, but there is other reasons for this sharp pullback. And let me go ahead and share with you a prime example of a heavyweight biotech name that is pulling back very sharply. This is Amgen, and you can see this sharp break down below that 200-day big volume continuation. And this is all about the company's weight loss drug. There is some concerns as far as its effectiveness. So you are going to see some of these bigger biotech names pulling back as well as other names. So if you do own biotech stocks, certainly you will want to take a look and see, did they participate in that overall general weakness? From here, I did want to share with you an area that is outperforming, and that is the Bitcoin. It's not an area that I follow super closely, but it is of note that this Bitcoin to the US dollar is now continuing back to this near-term high. And the relevancy here is normally a move into Bitcoin does signal a risk on type of environment. So it is not what we are seeing with that VIX rising, the markets pulling back, riskier small caps and biotechs pulling back. So it's kind of a counter trend. But again, I don't follow it super closely. I'm sure many of you viewers are going to be well aware of why Bitcoin is up there, placed at a near-term high. From here, let's go ahead and take a look at some other stocks this week that have had big moves, and the purpose and to the upside for the most part. We want to see areas of strength that are counter trend to relative weakness that we are seeing in the markets. First up here is Bloom Energy, BE, alternative energy stock. And I'm not sure if you can see, but they were up quite a bit on news today, but they had been rallying. This is a stock that I own, so I'm quite pleased with this nice pop today. And I will share with you what it is all about. Bloom Energy has entered a partnership with AEP, American Electric Power, and Bloom Energy will be providing them with their fuel cell technology. Huge news. It is all about AI related. So what I have found in screening the activity from last week, that AI trade is still, for the most part, alive and well. So this gap up, I did want to share with you a couple of characteristics that took place. First up, we can see huge volume on today's move higher. We did gap up into a base breakout. And last up, we closed the week in the upper portion of its daily trading range. Now, certainly we do need to note that the RSI is at 86. No doubt it is overbought. However, longer term, I do anticipate further upside for BE, and then a couple of other names that we can take a look at that had advances. PLTR is Palantir, and many of you are probably very familiar with the company. They are another AI-related stock. They did advance 11% today, and this was due to the fact that there was news that they are now going to be included in the Nasdaq Composite Index. So that helped for that jump. But what I did want to point out to you is the relative outperformance that took shape even before today's big move higher. And again, this is a well-known company in the AI space. They work closely with the government. That's their primary focus for revenue sources at this time. But it is another indication of that AI trade still retaining its attractiveness. And then also looking at the markets, you want to be aware of areas that, again, were relatively strong last week. You're on the lookout for these areas to then continue to outpace the markets once we get back into a stronger uptrend. So from here, let's take a look at a couple of companies that reported earnings. First up is Block Inc. And you can see this gap up that took place. And this is another company that had a nice lengthy base breakout. They are a payment processing company, and it is an area of the market that is seeing quite a bit of vibrancy. So taking a look at this base breakout, you can see that we are pulling back nominally, but net for the week, the stock is performing really quite well. We'll take a look at that RSI and that MACD. This is that MACD still relatively early in its downtrend reversal. And then likewise with this MACD RSI, we are up here above that 50 level and in positive territory. So we do oftentimes, you will see movement in stocks that are in the same space. We'll take a quick look here at PayPal, PYPL. This is not earnings related. It is more in line with because of Square's strong earnings results, but net holding up really quite well relative to a somewhat weak market. Last up, I'm going to share with you two companies that are really smaller, and I'm going to guess that many of you would not be familiar with them. It was brought to my attention from screening this past week, and they are also in that digital payments space and are faring really quite well. First up is Dave, DAVE, and again, this is a digital payment processing organization, and this past week they did have execute this nice base breakout here and to a new high. And it's really a new genre that has been talked about for years with this digital payment move toward that area, but it is finally coming to fruition where companies are coming in and showing really good earnings, gap up into a base breakout, heavy volume. There we are with that MACD crossover. One other name that is not going to be super well known, but again, indicative of the strength that we are seeing overall in the digital payment space. And this is Sezzle, SEZL, a little bit of a smaller stock, but again, that gap up into a base breakout and then a nice high, tight flag formation as the stock digests this big move. And again, of note is the fact that it's in a strong industry group, and that's going to account for about 33% of your price movement. Is going to be making sure you get that industry group right. If you can get that sector right as well, financials are the top performing, then close to 50% of your stock's movement to the up or downside will be affiliated with the industry group and the sector. So you do want to be aware of that. Last up, I did say before last up, but this is going to be areas and stocks that have pulled back that are still exhibiting quite a bit of strength. EAT is Brinker. Now, you're not early in the name, but the concept here is that it is pulling back to this 10-day moving average. You can see historically that that has been a buy point for the stock. Another healthy mover here is Sprouts, SFM, a supermarket that's mostly natural foods, gapping up on earnings and then pulling back very orderly to this 10-day simple moving average, very much in line with what took shape their prior earnings, where they gapped up and pulled back to that 10-day simple moving average. Last up, we'll take a look at another company that also came out with earnings relatively recently in that industrial group that's still holding in well. This is Sterling Infrastructure, STRL. This huge move, earnings driven, pulling back to that 10-day simple moving average. That's it for this week. Everyone have a fantastic weekend. Any questions you might have, please leave them below. If you like what you've seen, go ahead and hit that like button. I'll look for you here again next Friday.